Hey, Rob's here. Eric's here. What's happening? Good evening, gentlemen. Who else do we got? Duty driven. Cool beans. How are you this evening? John, James. Tomas's. Come on. Going work. Christopher. Garrett. What's happening? Wyatt. El Reed. Gay all day. What an interesting name, I do have to say. Oswald, what's happening? Alright, this is just not working over here. Alright. Oswald. Larry, what's happening? Handied. Me Stevenson. Me Stevenson. Me James. You Stevenson. Yes. Brian. Lulz. Marks. Jay. What's happening? Nandita. Tony. Rel. What's going on? Well, all getting here. All getting ready to roll. Good evening, everyone. My name is James. This is Dividend Stock Talk. You like that, Tony? Cool beans. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for a ride for a safe, predictable, consistent 1% per week using nothing pre-qualified dividend stocks. Now, the reason I like dividend stocks, well, simple, consistently profitable. means it's easy, it's simple for me to see how easily profitable these companies are. You just go to the list of the dividends and how often have they increased. If they increase every single year, well, they're profitable. You cannot give more and more money out unless you have more money coming in. Simple. It actually sounds logical. It does. Imagine that. Company makes money. It shares it with its profit, with its shareholders. Anyway, that being said, it was an interesting day today, wasn't it? It was kind of fun, kind of interesting. What's going on? I got a couple of phone calls. I did. Anyway, is she even here tonight yet? I don't know. She might not be here yet. Jim Bowman, how are you today? Tone Parker, Movie, Mark, what's going on? All right, so got a phone call this morning from someone just a little bit panicky, saying, I hit the wrong button. It's like I say it every single night. Eventually, most people, when they're new in this downturn, have been getting stuck with covered calls. I'm not quite sure Tony would call it stuck, because every stock that I have no problem holding on to. And yes, even though the stocks are down that I have, they still bringing me in money every single week. Now today's Monday. I won't know exactly how much I made this week until Friday. But when that time comes, I'll let you know. Dafa, what's happening? Christian, what's going on? Skip. This is the highlight of my evening. Oh, Skip, I'm not quite sure if I'm disturbed or not. Larry, Wayne, what's going on? Claire, good evening. Oh, got it. Thanks. Good luck to all of us. Hey, Tony, what I always tell people is, don't lose your head. You picked a company for a reason. Okay, if it's a good stock, if the company's been in business long enough to prove that they're worthy of your invested dollars, that's a decision only you can make. I look for companies that are over 4 or 5 decades. 4 to 5 decades. Companies that are consistently profitable year after year after year. I'm okay with holding them. Okay? I have no problem holding on to U.S. Steel, CVS. What else? ExxonMobil. I have no problem holding Macy's. Kohl's. I have no problem holding on to these. The thing is, I'm looking for something totally different than what you guys are looking for. I have no idea what you guys are looking for. But what I'm looking for is a simple, safe, predictable, consistent 1% per week. Now, I don't get it every single week. I may not get it this week. I did in 2 accounts, that much I know for sure. But the other 3 or 4, I'm not 100% sure yet. Because I did have a margin call. Not a fact. Yeah, I had a margin call and a margin warning. So. Just brought up Eaton Corp. You gotta give me the ticker symbol. Alex, need the ticker symbol for Eaton Corp. It's not one of those stocks I normally trade. If I don't normally trade it, I don't know what this ticker symbol is. EOETN. All right. Give me a second. ETN. Let's take a look. ETN this evening. ETN. Interesting. why am I? Oh, that's why I remember. Yeah. Okay. So here's Eaton right here. They had a nice move today. That was a nice move. So let's take a look at it. TSLZ. All right, Justin, you're new here. I only do companies that have been in business for at least 20 years. Tesla's not there yet. Tesla doesn't have profits that they share in the form of a dividend. So I don't do anything related to Tesla. Sorry. Mary Jane, how you doing? All right. So we're looking at Eaton. I'm looking this way because that's where my chart is. You get one here, you get one there. Down. Which one do I look at? This one. It's the biggest one. All right. So that being said, look at here. Here's the high. Here's the low. Here's where it was. Here's where the motion. Look at the motion. Sideways, up, down. Okay. Basically just went sideways all year with a little brief up down here. We know what down here. Okay, so let's take a good look. Because as it looks like it's a channel, small channel here. Then the channel gets a little bit bigger, but it's still going sideways, staying between 260 and 360. Staying within this range right here, it's just going sideways for the whole year. So it looks as if it's coming down to a lower level here, then should go back up. But Thursday and Friday happen. So let's see what that looks like. Now, if you like Eaton, fine. I mean, it's not one of those companies I consistently trade. I don't think I've ever traded Eaton. Well, maybe once or twice. Can't remember all of them. All right. So now, a year ago, we're looking at 326. Top of the year, 380, and that was end of November. All right, so since the beginning of the year, look at the last 90 days. Went up, came down, up, down. Now we had a gap on Friday. She gapped down. It was a perfect setup on Wednesday. Monday, Tuesday, Wednesday, perfect setup. Let me zoom into that and show it to you. Because this is what we were looking at. Similar to what we were looking at. All right, so let's go here. All right. This is what we were looking at last Wednesday. Okay. Monday was the bottom. Tuesday was up. Wednesday was up. So it looks like Thursday would be like a perfect setup to jump in and take that next ride up. So look at it. Up, down. Where's it going next? Normally. It would go up. Normally. But Trump threw that curveball and boom, look what happened. Let's go. Right there. Thursday was down. Friday was down. And today was up. Okay. She did open up down though from Friday. She opened up down, but then she recovered nicely. Now she's at 252. All right. So could that be? Could this be the bottom? And if it is, it's a great place to jump into it. Just in case you're thinking about it, let's take a look at what it looks like. Yeah, baby's in the house. What's happening here, baby? How you doing? Donna, Bumblebee, good evening. Tate, peace, brother. Okay. So let's take a look at Eaton. If we were going to do a covered call on Eaton. I like covered calls. The reason being they're one of the simplest, safest trading strategies there is. It's simple, it's quick, it's easy. I'm done and over with, and it's simple. Blue Guava. Good evening. All right, the 252s right there. 252s. All right, I'm using the number right here, the last traded price. Because these numbers right here, aftermarket hours, if it's trading aftermarket hours, they don't correlate the current with the current options available. All right, so let's do just one contract. Because 10 might be a little contract uncomfortable for some people. Price of what 10 contracts. All right, here we go. Here it is. Buy one covered call of Eaton. ETN. Call Eaton. 100. ETN. Weeklies. It lets the brokers know that it is a weekly trade. Are using a weekly option. 11 April 25. That is this coming Friday. That means this
opportunity for whoever buys this option. Opportunity is going to end at 3:59 p.m. Friday afternoon. This Friday, 4 days away. So if they're going to do something, they better do something. All right. So the 252.50 call option against Eaton stock at the market to open. Reason why it says to open is it's 2 trades. Okay. You're buying stock. You're selling the option. That's 2 trades, but you're only going to pay 1 commission when you do it from the get-go. Now, once you already own a stock, it's a different approach. But getting in is one approach. Getting out is another approach. So we'll take one at a time. All right. So here's the order, right? Here's the maximum profit right here. We're going to do a little bit of calculation so you can see what percentage rate that would be if you actually did this trade and it went in your favor. Ifs, ands, and buts. Everything just flows. All right. So profit's going to be $1,080. The cost of the trade, including commissions and fees, $24,170. So let's see what kind of rate of return that is. Clear that out of there. Profit is $1,080. Now you take the profit and you divide it by the investment. And the investment was $24,170. Divided by 170. 4,170. Now that's not bad for 4 days. 4 days. Think about it. 4.4% 4 days. If the stock is above 252.50. Right now, the stock's at 252.45. Okay, so why wouldn't it stay right where it is, or go up just a little bit between now and Friday? So between now and Friday, this is what I'm going to collect. This is what I for one contract. Okay. So can I do 2 contracts? Can I do 3? Can I do 8? Can I do 8? I don't know. How much do you have? Everybody's got to figure these things out for themselves. I have strict rules for my trading. All right. So that will look good. That's how I would do it if I was going to buy one tomorrow. But you have a couple of questions. You need to ask yourself. And question number one is, does it make sense? That's number one. Does it make sense to buy or let's look at it 2 different ways. You can buy an investment, or you can create cash flow. I don't know. I love you, Max Loss. Well, the max loss is basically if the company goes bankrupt and you're shit out of luck the very next day. Does that happen? No. It's never happened that I know of. Okay, it could have happened. Okay, so let's say you buy something and the very next day they put up a out of business sale, out of business sign, and they take all your money and go to the Bahamas. Well, you see that in the movies a lot. But do you do that in a company such as Eaton? Okay. Always remember who you're putting. What horse are you putting your money on? Whatever metaphor you like to use. Okay. What seeds are you sowing? What reef diving on? Okay. What uphill mountain are you climbing? Whatever metaphor you want to use for, hey, I got to win today. Whatever metaphor you want to use, hey, figure it out, and then use it. Keep it feeding you. Anyway, Eaton. High, low, all that kind of nice neat stuff. Does it make sense? That's number one. Number 2, do I like this company? Number 3, do I like this company at this price? Number 4, am I willing to buy this and hold on to it to the day I die? Consistently selling weekly options so I can get weekly cash flow every single week. It's a big question. Okay, this is your money we're talking about. Okay, either you're going to do it or you're going to give it to someone else to do. And it doesn't take that much time. All you're doing is get up in the morning, okay, what did I buy this week? Where's it at now? What can I do? And it's as simple as jumping into a rent-a-car. Okay, all right, where's that button? Oh, there it is. Where's the windshield? Okay, here it is. Where's that? Okay, there it is. Anytime you get into a new car, okay, you don't know where anything is until you get comfortable with it. Well, this is something new. Okay, not everybody has done this before. Buy a good company that has good cash flow so that I can get a weekly interest, weekly money off of it. Nobody's ever come up with that idea before. Not that I know of.
Andrea, good evening. David, what's happening? North Hudson Rentals. Is it true JP Morgan Energy Fund pays $3,000 every quarter? You gotta give me the ticker symbol, dude, and I have to look up the numbers, but I honestly could not tell you on that one. User 9279499526626. Hey, you were here yesterday. I remember that silly number. SJW. Isn't that Smuckers? SJW? Is that right? I don't know. Could be right. SJW. SJW Group. MJ. Whatever. No. Sorry, dude. Okay. See where it says 17 April, 16 May, 20 June? Yeah, those are months. Okay, they don't have weekly options available, which means it's not on my list, which means that's a no. Sorry. Jacqueline, good evening, and how are you today? Grandma's in the house. So is Scarlett. How you guys doing? John, the expression, I lost my shirt, I can completely understand. Now I qualify for government assistance. It's okay. I'd like to hear more of that story, but all right. Roy Flowers, good evening. Ambi Riley, what's happening? All right, so what do we have over here? Love the shirt. Audio feedback on your other YouTube. Feedback on my other YouTube. Let's go find it. I've got to find. Oh, you know what? Maybe check right here. I've got to find. Oh, feedback. Let me turn that down a little bit. Turn down the volume. Desktop audio. Okay, that better? Hopefully that's better. Oh, QMAS wants to take a look at Boeing. Hold on a second. Oh. Good evening, Luigi. Scott, how you doing? Zevon, what's happening? Elijah, good evening. All right, so let's keep on rolling here. Boeing, BA. I don't know why we're looking at BA. Didn't they do something improper recently? BA. Boeing. Okay, Boeing had a little bit of an update. Really that great. Alex, good evening. Remedil, good evening. Luigi, do you sell covered calls for Apple? No, I do not. Once in a while I do, but very rarely. Not very many people ask me about Apple. It is on my list, so every once in a while, okay, it will come up. Okay, usually only comes up when they have their dividend coming, because just before the dividend, stock has a tendency to go up. So if the stock has a tendency to go up just before the dividend, that's where I want to jump in. My voice sounds terrible. Holy shit. Well, that's a little better. SCL. What the heck is SCL? SCL. Wow. Steppin'. Let's get steppin'. 17 April, 16 May, 20 June, 19 September. Yeah, those are monthlies. I don't do monthlies. Scott. Hold on, Scott. Okay. Monthly options don't work for me. Okay. I like a simple, safe, predictable, consistent 1% per week. The only way you can get 1% per week with a monthly option stock is to sit and watch the charts all day long. Yeah, I have no desire to do that. SCHD. Oh my goodness, Jason is newer than new. Jason, I'm not even going to dignify that with an answer. Okay, if you don't have enough if you don't have, I'm trying to think of a polite word of saying, dude, you need to check the numbers. Seriously. How consistently profitable is SCHD?
How often have they increased their dividends? And how consistently do they increase it? Then figure out what is their book value, what are their, what is the yield for SCHD? No, I don't like it. I looked many times. Scott. Yes, I haven't gotten to pull up the option change. Okay, Scotty, I'm not quite sure why we're talking about that. You're in the program test screen. I'm in the program test screen. Ow! Am I? Let's get there. I'm not quite sure what we're talking about, but alrighty. Oh, that's right, damn it. Alright, I remember. There it is. That's it. I forgot to change the setting. Scarlet XLP. Hong Kong. We will all be broke. PB man, how are you today? Okay, I got that one. Scarlet, good evening. Scarlet XLP, I seriously don't think they are a dividend stock. Don't think so at all. XLP. Spiders. Okay. Why are we looking at the spiders? Well, let's go to Yahoo. And look up XLP. Find out. Oh, okay. I'm totally being heard. Good. Let's take a look at it. Consumer Staples Select Sector Spider Fund XLP. $77 a share. The yield is year to date 3.33. Considering you're a newbie, Scarlet, it kind of takes the fun out of picking on you. So I'm not going to. So it does take the fun out of it. Let's look at some historical data to see how consistently profitable this company is. I want dividends only, and then I want to go all the way back to as many dividends as possible. Amanda, how you doing? Roberto, ¿qué pasa? It helps you learn. Okay. So just sit tight. What we're looking at now, Scarlet, is we're taking a look at every single dividend this company or this ticker symbol has. How consistently profitable is this group? Okay, user 6834. We'll get to that XPLX, whatever the heck that thing is in a little bit. Right now, we're checking out XLP. Doesn't look good at all. Alright, so I want to go 20 years back. Now, when I say I have 5 rules, okay, 5, remember, simple, safe, predictable, consistent, no way to lose. That's my criteria right there. 5 rules. Number 1, never buy something you don't want to hold on to, or never buy something you don't understand. However you want to look at it. If you don't know what it is, if you don't know what they do, okay, if you don't know a lot about a certain company, don't buy it. You should know everything you need to know in order for you to give them your money. Okay, if you make the mistake, that's on you. So rule number 1, never buy something you don't understand. Number 2, never sell at a loss. Number 3, make sure the company is consistently profitable. Number 4, weekly options. And number 5, double check the numbers, make sure all the numbers work. Okay, so that's my 5 rules, my 5 criteria. Okay, so let's take a look at how consistently profitable. Now, when I say consistently profitable, I'm looking for 2 decades, which is 20 years. So we're in 2025, so 20 years ago would be 2005. So let's take a look at 2005. Right here. Here's where the profits start, right here. So, 10, 11, 12, 13. That sounds about right. 6, 13. 17, 15. Wait a second. This part's not right. Okay? 13 to 17, that makes sense. 17 to 15, that's going backwards. That means you're not as profitable this year as you were last year. That's what that means. But look, it gets worse. It goes 13, 13, 13, 17, 15, 15, 15, 12. It went down again. So my idea of consistently profitable is 1, 2, 4, 6, 7, 11, 15, 18, 24, 28. Higher and higher and higher. Not 13, 17, 15, 12. That's not consistently increasing. Hold on. Let's continue. 19, 20, 12. 18, 18, 25, 12. 26, 16, 22, 22, 29, 18, 24, 26, 40, 19. This thing just does the same thing over and over again. Up, down, up, down, up, down. Now, when I say consistency of profitability, let me show you what that should look like. Okay. So this should give you a good idea of consistency of profitability will look like. This information is all free, by the way. This is Yahoo Finance. It doesn't cost anything to find this information. All right, so let's take a look. Go all the way back to 2005. Right, 2005, 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 52, 51, 56, 62, 68, 75, 83. Every single year it was higher and higher and higher and higher. That is consistency of profitability. Now, I didn't need to read the annual reports. I didn't need to read the quarterly reports. I don't have to look at the headline news. All I have to do is look in the right place for the information. Yahoo Finance, it's free. Okay, and then you look at historical data, and you look for dividends only, and that will tell you what the dividends were. Now, if a dividend is a portion of the company's profits that they give to the investors, that's you and me. We're the investors. So when the company is profitable, they give us more money. That's what a dividend is a portion of the profits. So what you're doing is you're not buying a stock or a part of a company. You're buying cash flow. That's it. You're buying cash flow. You're just hooking your train up to a decent, you're hooking up your wagon to a decent set of horses. Whatever it is. So great. Maybe this company will great this week. Might not be great next week. So let's get rid of it and get something else. Okay. Every company I know of is always striving to do better. So they're all in a race to do better than what they did before. So yeah, this company might be doing great this time. But next week, it might be someone else. The week after that, it might be someone else. So I have a certain set of companies I'm looking at. So to give you a perspective, I check once a week, see how many stocks are available. Well, this week, we checked yesterday, there was 10,000, I think it was 39, 10,039 companies available in the stock market that you can invest in. So which one do you pick? Well, my criteria is simple. 20 years of consistent profitability, kind of like what you see right here, and weekly options. Now you might think, out of 10,000 different choices, I could come up with a decent list. Well, I do. I have the Dividend Kings, 54 companies that have increased their profits for more than 5 decades. The Dividend Aristocrats, okay, Dividend Aristocrats, about 67 companies that have consistently increased their profits. Dividend Champions, 150 companies that have consistently increased their profits. Dividend Contenders, 300 companies that have consistently increased their profits. And then for the fun of it, let's throw in Warren Buffett's list just to round it up to about 300. 300 companies consistently profitable and have weekly options. So there's only 13 weeks in a quarter. So you got 300 companies all writing dividend checks that get higher and higher and higher. Well, all 300 aren't going to move at the same pace at the same time. So how do you figure out which ones move at what time? Well, I go right to here. All right. Now this is this month. Okay, April 2025. Each one of these little green dots represents a company that pays a dividend and consistently increases. So this EX dividend calendar, well, it's included in the software. Now, I'm not selling any software. I'm not selling anything. But I'm saying the software is called Think or Swim. It's a trading platform through Charles Schwab. Now, Charles Schwab didn't create it. They bought it. But he bought it from TD Ameritrade. Well, they didn't create it either. Okay, a guy named Tom Sosnoff and a couple of his buddies created this thing like 25, 30 years ago, something like that. I've been using the same software for 20 years. Well, they sold it to TD Ameritrade. TD Ameritrade got bought by Charles Schwab. Now we get to use it. The nice thing about that is they haven't changed a thing in 20 years. Great. Not something I need to learn because it's the same thing. All right. Anyway, besides the point. So the EX dividend calendar tells me when each one of these companies is going to pay a dividend. So you take the 300 companies that are consistently profitable. You throw them into the calendar by when they pay their dividend. You got 300 companies paying every 90 days. So those 90 days are cut up into 13 weeks. Okay, so each quarter, January, February, March, first quarter, done, over with. April, May, June, second quarter. That's where we are right now, April, the beginning of the second quarter. Then you got July, August, September, third quarter. October, November, December, fourth quarter. Each quarter, 13 weeks. Each week, the exact same as the previous quarter. So the first week of the first quarter is the exact same as the first week of the second quarter, which is the exact same as the first week of the third quarter, so on and so forth. Because these companies, some of them over 100 years old, write a dividend check every 90 days. So you got 300 companies every 90 days creating a opportunity for a cash flow. So what do? I go in just before the EX date. Simple. I sound like one of those midnight oil salesmen trying to sell some shit. I'm not trying to sell anything. I'm just sharing information. Wow. I'm listening to myself. I sound like a salesman. All right, anyway. By doing this, it allows me every week to choose a different set of stocks. So as the stocks go up, I buy it, I collect a premium, I go on to the next one. Simple. One after another after another. Okay, you're going to get older anyway, so you might as well have something to look forward to. Okay, you take your calendar. Here's Timmy's birthday. Oh, here's when AbbVie's paying their dividend. Okay, here's Aunt Sally's anniversary. Oh, that's the same day Clorox and Lowe's has a dividend, right? Hey, here's Mother's Day. Oh, look at this. General Dynamics is getting ready to pay their dividend. Just stick it into the calendar. Like, where are we putting our money this week, honey? No. Clorox or Colgate-Palmolive. It's just a different way of investing your money. Another part of a routine, your morning routine. 5 or 10 minutes in the morning, you change your routine, okay? Where do we have any money to invest this week? Okay, great. What's coming up? What looks good? It doesn't take long. I'm gonna actually let's go through a couple to show you exactly how long it takes for my daughter. Because when my daughter was 9, she said, "Daddy, can you teach me what you're doing?" 9 years old. How do I teach her? Most adults don't understand this. So, for her, 9 years old, it had to be simple. Simple enough for a 9-year-old to understand. Safe, so she doesn't lose any money. Because we all know if a 9-year-old little girl loses money, she's going to cry, daddy's going to feel like shit, mama's going to get involved, and daddy's going to be sleeping on the couch. But it's not that bad. Anyway, simple, safe, predictable, consistent, no way for her to lose. So the 5 rules, very important, the 5 rules. Never buy something you don't want to buy and hold on to, because you just might. Okay, the longest I've ever purposely held on to something was 9 months. And the only reason that was because it kept paying me a dividend. Not a dividend, a premium. Every week and every 90 days I would get a dividend. So that stock, it was, hold on. So I'm used to saying it was last year, but I've been saying that for 2 years. So it was like 3 years ago. There was 3 of them. There was Target, PPG, and what was the other one? Kimberly Clark. I held on to Kimberly Clark for 9 months. I got 3 dividends. 3 dividends, and about, what's 9 months is 13, 26, but about 30 different premiums. So it was a nice, profitable trade, even though the stock dropped. Antoine, wonderful evening, cool beans. Gosh, I'm trying. I have saved up $10. What do you think? Would it be best place to put $10? For my wife and children. I am tired of living off welfare and would like to make some money. Thank you. Okay, I'm not buying whatever you're selling. Sorry. Okay, funny thing is, I'm not selling anything. Okay, and for me to tell you where money would be risk, because I don't know anything about you. Okay, I have no idea anything. So I don't give advice to anybody. I can look up stuff and give you my opinion on things, give you an idea of what I would do. But I can't tell people what to do because I don't know anything about you. And if you want to leave your phone number, I'll give you a call and we can chat. Then it might be more helpful. And I do. I actually call people who DM me with their numbers. You'd be surprised. Huh? It's like, hey, this is James from DB. Again, whatever. So anyway, let's keep on moving forward. So XLP. Interesting. All right, let's look up something else. MPLX. What is? Hey, Roberto wants to know what license I have. I have a driver's license. I drive everybody crazy. MPLX. MPLX. No. Okay? 17 April, 16 May, 20 June, 19 September. Those are monthlies. I don't do monthlies only because they just don't work for me. I'm looking for 1% every... Wow. I might have to get something a little stronger. All right. But that's 2008, the recession hit. Yeah, I remember that. Okay, I was doing real estate back then. Okay, but still, I still had a company that was still making ungodly amounts of money. Anyway, thank you for that, Scarlett. You're welcome. Taking the time to explain. You're welcome. I'm still rooting for DAL, Delta Airlines. Okay, Luigi, hell no to JetBlue. Okay, they're not 20 years old yet. Franco, how did you teach a 9-year-old? Okay, well, Franco, you're new here. So I'll tell you what I'm going to do for you, Franco, considering you're new. And I'm probably sure there's other people new. So, little princess. Where is it? Right here. I got to fix this web. Right there. Sit tight. We're getting videos. Oldest videos. Here she is right here. Hold on.
Hi, I'm Gracie, and as you being part of my internet website called Thingy, which my dad being part of my internet website called that. Being part of that, you're going to be getting weekly lists of trading. Every month you'll be getting 4 lists, and every month you're getting 4 lists.
That means you might have there's a different company paying out dividends. It always makes
makes me laugh. All right, well, teach a 9-year-old, it had to be simple. Okay, when I say simple, I mean simple. Okay, adults have a tendency to make things complicated. It boggles my mind when people ask me certain questions. I'm thinking to myself, what the hell are you thinking? That's where the t-shirt comes. What the hell are you thinking? Okay, like with JetBlue. Okay, what the hell are you thinking with JetBlue? Take a look at the numbers. How consistently profitable are they? What are you looking to gain from it? Now here, I'm looking for cash flow. Now, if you like JetBlue, that's more of a speculation, like you're putting your money on the long run at the horse track. Okay, I want 50 to 1. Yep, fine. You just might get it with JetBlue. I don't know. That's not what I'm looking for. I'm looking for cash flow, which means the company has to be profitable and have weekly options available, okay, and are consistently profitable. And the numbers got to work. JetBlue, just not there yet. Okay. Free speech and other stuff. VFC, huh? VFC. I know VFX was on our list, or is it VFC? Yeah, VF Corporation. That was on the list for this week. Yeah, look at the beautiful setup. Hold on, I want to show you this. Look at that beautiful setup. Here's your high here. Comes down a little bit, retraces, drops, finds the bottom right there. Okay? That was last Monday, the 31st. Look at the first, lovely day. Look at the second, awesome. Okay? Then Trump comes up with the tariffs the very next day. I mean that day right there after the market closes, after 3 days to the upside. That looks freaking beautiful. Look what happened on Thursday. Zoom in a little bit closer. Okay. Watch what happens on Thursday. This is Friday. Thursday. Big drop down and kept going. Went from 16 down to below 12. And then Friday, it goes even lower. Okay, that's what happens when something can change the trajectory. Okay, they would have what's called a known event and an unknown event. Okay, stocks only move for one of two reasons. One, it's either one or the other. Not both, it's either one or the other. So what makes the stock move? Well, you have what is called an unknown event. Okay? Well, we kind of knew that he was putting the tariffs on. Okay? And this is what happened. This is an unknown event. Now, we knew it was coming, but we didn't know which way it was going to go. Also, we have what's called the unknown event. Could be a hurricane, flood, tornado, earthquake, any one of those natural events that just happens, and you have to react to it. Something kind of like this. We didn't know this was going to happen. So then you have your known events, kind of like an earnings report or a dividend. We know exactly what date they're going to come. And then how does the stock react to them? Definitely not this. Anyway, so today, here we are, Monday. One day to the upside. Could it be? Could this be the bottom of the year? It could be. Do you remember the pandemic in 2021, just a couple of years ago? Everything bottomed out. And we were watching every single day. Where is the bottom? Well, here's your opportunity to find the bottom. You're going to find a lot of stocks because of Thursday and Friday are at the year bottom. So what's going to happen? Okay, are people going to negotiate? Are other countries going to negotiate? Okay, is this thing going to blow over? Are people going to say, oh, we're charging you 10%, so it's okay for you to charge us 10%. Or, you know what, we don't like that. Let's just get rid of tariffs altogether. Either way, something is going to happen, and either way, we are going to deal with it, and we are going to move on. Okay, every major event
Well, yeah, it attacked the stock market in a way, well, whatever happened, because we saw what happened during the pandemic. Stocks dropped, some of them lost 50 to 70 to 90%. But after that bottom, because there was a bottom, it went back up again. Same thing here. Here's the bottom. Could this be the bottom? Could it? Could Friday be the bottom of the year for VFC? It very well could have. And you're going to make most of your money in the stock market buying low and selling high. Now, I'm not encouraging anyone to buy anything to jump on in. No, I'm not doing that at all. I'm just saying opportunities come every single day. Okay, so is this an opportunity? Is it the bottom? I don't know. Do you think VFC is going to go out of business anytime soon? How long have they been around? How consistently profitable are they? Is this going to affect them? Do I like this company? Do I like it at this price? Is it going to be profitable for me? These are all valid questions you need to ask yourself. I got a question. I got a couple of questions I missed. Okay. Amanda, hello. Rihalti, how are you doing? They Vidi. I have $3,000 to invest in investing in SPY for long term. Should I invest all in SPY? Okay, now I can't tell you what to do. I mean, I could tell you what to do, but I'm not going to because I don't believe it's going to help you out because I know nothing at all about you. Okay, so if I knew something about you, maybe I'd give you a little tidbit, a little push in which direction. But, just coming up here and give me 3 lines, I have no idea. Okay. All right, you're welcome, Scarlett. Garrett, you're still holding on to DAL. Well, let's take a look at DAL. I'm going to write VFC down for next week. Or, no, this week. I want to keep my eye on that one. Okay. Yeah, I want to see what happens tomorrow. Okay, so Garrett wants to take a look at DAL. Hold on a second. VFC. We just looked at that one. Luke, what's happening? What are we doing now? We were just doing a VFC Corporation. E. Schmidt, hey James, love watching you. Interesting times. Oh, thank you there, sir. Well, let's keep on moving forward. That was VFC. All right, VFC, there we go. Next on the list, Delta Airlines. DAL. I'm not even sure how I feel about Delta Airlines. All right, but here we go. Let's take a look. Here's the high of the year, $70. Here's the low, 35. Well, if you aren't ready, the high, $70, the low, 35. That is a 50% drop. Okay, $70 down to 35. Yeah, how uncomfortable do you feel? Do you feel like you want to bail? You want to get rid of it? Why? You never buy a stock you don't want to hold on to, regardless of what the price does, because it's going to give you some type of cash flow. You either do covered calls on it, or you're going to collect dividends on it, or you need to collect something on each and every individual position that you have. Well, why wouldn't you? That's a good question. Why wouldn't you take advantage of the investment opportunities with your portfolio that you already have? Paul got some great premiums at the 10 a.m. bump. Cool beans. Thank you. You're welcome. Is SCHD good? Oh boy. I got 3 people asking me about SCHD. Well, let's do Delta Airlines first, and then we'll take a look at SCHD, and I'll give you my opinion. Okay, so here's the high, the low. Here's where it was. Here's where it is. Look at the movement. Up, down, up, down, up, down. Where's it going now? It's searching for a new bottom. Everybody's searching for a bottom.
We just saw something very similar to this.
Hey, look at your last 30 days. Your 30-day high, she drops, retraces a little bit. Nice setup last Wednesday. Somebody threw a monkey wrench in. Well, here's the bottom here. Friday. Today was an up day. Okay? Could it be? Don't know.
What does it normally do this time of year? Let's take a look at the Denali chart. We haven't looked at that today yet. Now, for those you know what a seasonality chart is, let me explain. Let me enlighten you. Okay. All the way to the left, January 1st, all the way to the right, December 31st. So you're basically looking at 1 year. Or are you? Anyway, the blue line represents this year, the movement this year, 2025. Okay? The light blue. Okay? The red line, see, it goes from one side always to the other. That's 10 years average. So that's 2015, 2016, 2017, 2018, 2019, so on and so forth. This is the average move right here. This is what it normally does, this red line. Okay, business as usual, this is what happens. Okay, I say that and everybody says, but this is not business as usual. No, it's not. But what does it normally do this time of year? This right here, that will almost stay there forever. That's that low mark in March, 3 years ago. Okay? They didn't have that before. But when you have like a 50% drop or a 75% or an 80% drop, that one data point will mess up everything. So the last week of March was when we had that jabby thingy and everything dropped. Anyway, you'll see that in a lot of stocks where the end of March has a big dip. Yeah, you got to take that into perspective of what it was. All right, so today, this little blue dot. This little blue dot right here represents today. The blue line, well, that's this year. This blue dot right there, that's today. All right, so let's zoom into that and see hypothetically this thing should do for the next few weeks. Okay, so if today's the blue dot right here, it would appear that it's going to dip a little bit more before she sideways, before she levels out, that's the word, before she levels out, goes sideways for a bit, and then in about a week, she's going to go up a little bit and then level out up there. That's what it looks like. Okay, this is not guaranteed. There's only 3 guarantees in life. Okay? Death, taxes, disappointment. Sound familiar? Okay? 3 guarantees in life. All right, so that's Delta Airlines. You got to ask yourself a question. Do you like Delta Airlines? Does it make sense to you? Are you willing to buy it and never sell it and hold it onto it for dear life? Create it like a little baby? Whatever. Whatever decisions you need to make in order for you to come up with a buying decision or not. Is it a company that you want to hold on to? Is it paying a nice dividend? Does it have premiums that you can sell on a weekly basis to create more cash flow? They're very interesting questions. All right, so that's Delta Airlines. Look at the numbers. 37.29, so the 37.50 is going for 212. That's a shitload. But here's the thing. Remember, these are aftermarket hours. Just as the market was closing at 4 o'clock. They don't mean anything at the moment other than give you a rough idea to help you do some calculations. But as the market opens first thing tomorrow morning, 9:30 a.m., all these numbers are going to change. But what doesn't change is the mathematical equation. Okay, what am I buying it for? The ask price right here. What strike price am I selling? What strike price is closest to the purchase price? Okay, 38.49, well, the closest one is going to be the 38.50. Okay, the 38.50 is selling for $1.74. Well, $1.74 on a $38 stock, well, that's a nice return. For the fun of it, hold on. Calculator. Okay, $1.74
divided by the purchase price, $38.50, that's 4.5% for 1 week. Well, actually, for 4 days, because all these options right here expire on the 11th of April. Now, this is why I want weekly options. Okay, these all expire the 11th of April. These right here, the 17th of April, the 25th of April, that's 3 weeks away. The 2nd of May, that's 4 weeks. Can you believe that? May is 4 weeks away? Holy cow. But anyway, I like that one, Delta Airlines. If you like Delta Airlines, okay, are you willing to buy it and hold on to it? Now, I'm not telling you to. I'm just saying, does the numbers look enticing? It does to me. Okay? All right, let's keep on going. What company do you have on the TV right now? Darian, that is Delta Airlines. Okay, so let's keep on going. Laurie, good evening. Okay, Miss Scarlett, that was Delta Airlines. Okay, Suji and Ryan and someone else asked about SCHD. Alrighty, you're welcome. Arsenio, the shape of your head reminds me of the morning dew and the tiny leaf in an autumn tree. Well, alright, thank you kindly. Buy and hold stocks. Intel, we'll take a look at Intel as soon as we look at SCHD. Alright, so you probably a lot of you in the audience are probably asking, why is he looking at SCHD? He hates that one. SCHD. Well, the three gentle ladies who asked me about SCHD today don't know that. So I'm not going to go into the whole rigmarole why I don't like it. I'm just going to make it short and sweet. Are you ready? April 17th, May 16th, July 18th, October. Yeah, this is a monthly. Now, monthly means you can trade an option once a month. Now, the only downfall about once a month is that it only comes once a month, and there's only 12 of those throughout the year. So here's the thing. If I can get a check or a premium, which is basically a check, because believe it or not, stock options are insurance policies. Stock options are, it keeps breaking up. Stock options are insurance policies. Okay, there's a beginning date, an ending date. Okay, a premium, which is consideration, which is money changing hands, and then a mutual agreement or a meeting of the minds. I'm buying this, I have the right to buy this stock at this price between now and the date of expiration. Beginning date, ending date, cash, which is consideration, okay, some kind of compensation, and then a mutual agreement or meeting of the minds. It's the legal description, meeting of the minds in a contract. So whoever buys the option from me, now I'm buying the stock, which means I own the stock, but I'm selling somebody the right, the legal binding contract, that they have the first option to buy it from me at this price by this date, and this is what they're paying me. That's what I'm looking for. I'm looking to capture a premium every single week. Okay? But SCHD, once a month. Now ask yourself, would you prefer, all things being equal, to get 12 checks a year or 52 checks a year? Now you might say, well, you get more on this. No, not necessarily so. You get 1 to 2% for each option you sell. 1 to 2%. Sometimes you'll get 3 or 4 on a monthly, but not always. Same thing with weeklies. Sometimes you get 1%, sometimes you get 0.5%, sometimes you get 3% or 4%. Okay, so far tonight I've seen 3 of them that were over 3%. Well, if I get 3% every week, that's over 150% return at the end of the year. I'm only looking for 1. So it's got to give me what I'm looking for. SCHD, monthly. No, that's it. I could go into more details and tell you how crappy the return is. The yield, I can show you, they're not consistently profitable. But you can take it from there. Joe Murray, nobody. Band Chasing Jay. Kimmy Marie Wingard. Good evening, good evening. Aaron Hepp, my stock went higher than the strike roll tomorrow or wait to Friday. Okay, Aaron, it's always going to be about the numbers. Okay? What did you buy it for? What option did you sell? What premium did you collect? What is the break-even point? Remember, there's 4 people on the dance floor. Okay, there's you. You're the stock owner. You're selling the option. There's the market maker. He's the one who does the buying and selling. They have to go through him, but you have to go through him in order to sell it. And the buyer's got to go through the market maker in order to buy it. So he's the man. You can't get rid of him. You can't do anything without the market maker. You, the market maker. And then you got 2 possibilities. One is an option buyer. They just buy and sell options. They could care less about the stock. Do you care? No, you don't. You have something to sell to give you collateral to do it. That's the stock. That's the collateral. You're selling someone the option to buy that from you at a certain price by a certain date. So that's person number 3, the option buyer. Now they're looking to double or triple their money on the option. They're not looking to take the stock away from you. That would be the stock buyer who buys options in order to get stocks at a decrease because they think there's a possibility for it to jump in price. So if the stock 24.94 at this moment, let's call it 25, okay, if it all of a sudden jumps up to 30 to 50, whoever holds that option has the first right to buy it at 25. Okay? And you selling the option, you have to sell it to them at 25. Now, are you looking for the appreciation on the stock if the stock goes up? Or are you looking for that safe, predictable, consistent income? Okay, that comes from selling options. Because it's a total different world between selling options and buying options. Now, take into consideration, 80% of all options expire worthless. So if you're buying them, you got an 80% chance that you're going to lose. But that 20% is enough to entice people, say, yeah, it's worth the risk, it's worth the gamble. That's why they do it, because you get a nice return. So yeah, you lose 4 or 5, but 1 or 2 offsets all of that. Okay, but I don't do that. Okay? I want safety, and I want consistency. Okay. Let's keep going. Okay. Buy and hold stocks wants to take a look at Intel. Now, I do have some Intel. Did some trades on Intel lately. All right. Here we go. Here's the high of the year. Here's the low of the year in September. That's where it was a year ago. This is where it is now. Let's do a little bit of connecting the dots. Down, sideways, up, down, sideways, up, down. Where are we right now? 1957. It's in a downturn. It's looking for a new bottom. Well, look at the past 90 days. Okay? Up, down, up, down, up, down. As soon as she finds the bottom, where do you think she's going next? Now today, she opened lower than Friday. But she did end the day higher than she opened up. So it was an up day, even though it made a new low. Okay? So the question is, do you like Intel? Do you like the numbers? Could this be a turning point? It's not the bottom, because the bottom was in September. Okay? Here we are right here at the moment. It's low, but it's not the bottom of the year. Okay? But what do stocks do? They go up, they go down. They go up, they go down. They go up, they go down. Okay? Is this the turning point for Intel? And now only you can figure it out if it's the turning point for you. Me, I want to zoom in a little closer. Okay? I want 2 days to the upside. Tuesday, Wednesday, both of them higher. Yeah, I'll jump in on Thursday. But I don't want to jump in prematurely, because tomorrow it could be lower. We just don't know. It could be the bottom. We could have a lot of people out there in the audience saying, all the similar things. Okay? The high of the year, 39. The low of the year, about 18. That's a 50% drop. Most people say you come into a recession, you had a 50% drop possibility. Well, we already had a 50% drop on Intel. A year ago, we're at 39. Okay, September, we hit 18. And then now we're at 1950. Pretty close to that annual bottom. Okay, could it go lower? Yeah, it could. But is it going to? Well, that's why we watch it every day. Okay, now I have some Intel. So I'm always weary of, what did I buy it at? Where's it at now? Am I at risk at losing? Okay, because I have a simple goal. Consistency of profitability. Okay, I never want to sell at a loss. But wait a second, I can't say that. I actually took my first loss this year. First loss of the year today. So if you go in and take a look at each and every single one of my trades. Now I get 7 accounts. I share 3 of them publicly. Okay? So just for perspective, let's go here. Let's go. Weekly trades for 2025. Quick get. Okay? All these trades, it's got to be at least 8. 8 here. 7 here. Okay? That was just week 13. 12, 5, 4, 7. Week 11, 7, 3, 3. Week 10, 7, 3, 6. Week 9, 7, 5, 7. Anyway, count them all up. January 1st until today, 0 losses. Today I took my first loss. Funny thing though, you're going to get a kick out of this one. Let's get this. First loss of the year, Altria. MO. All right. Okay, take a look at Altria. All right. Here's the high. Here's the low. Here's where it was. Here's where it is. Okay, now Altria is an interesting little stock. Okay. Now, you see how stocks go up, down, up, down, up, down, up, down? Well, I bought Altria right here. Okay, see the drop? And she bounces up. That's where I jumped in right there. Almost perfect timing, in my humble opinion. No, wait a minute. It's further back than that. Right about there. Okay, so Altria is coming down here. Great time to jump in. So I jump in, and then I sold what is called the calendar spread. Okay, now calendar spreads has a better profitability than covered calls. However, they're not always 100% as accurate as these. These are the safest ones I've ever done. All right, so I jumped in back here. All right, I sold the 50s. I never short. A spread. Anytime you do a buying and selling, a spread, yeah, there's 2 legs, and somebody exercised a second leg. So I had to deliver 1,000 shares at $50, and I didn't have them. That's what shorting is. You're selling something you don't own. Now that was back in November, and I pushed it forward, 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 forward until today. Look at the big drop from 60 all the way down to here to 53. When it was at 53, I bought the stocks. I took a $3 loss. But I want to show you what I did because it was really creative. I thought it was cool as shit. Just my humble opinion, of course. Okay, so here's Altria right here. Okay, collected all these premiums, all these credits. See, credit, 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 credit. debit. Okay? All these credits means I made money, lost money. But check this out. This is cool. It is. All right, so I bought the stocks at 55. Okay? Which means I lost $5 per share. Because I sold them at 50 way, how far ago? Right here, which was the beginning of December. Okay. All right. So I bought them back here. So I fulfilled my contract. I delivered them at 55. Then that released a huge amount of money, which would called a collateral sale. Because anytime you short a stock, you have to put a certain amount of money aside in case you get assigned, which I did. So a certain money is sitting aside. So this morning I released that money by buying the stocks, delivering them. Then from there, that $3,000 loss, I wanted to go back at it, and I wanted my freaking money back. Okay, so what did I do? I bought the stock at 55. Okay, I sold it at 55. Well, I delivered it at 55, so I took a $5 loss. Then I turned around and I bought it at 55, and I sold the $55 option, and I got $1.55 off of it. Well, that was $1,500. So I got half of my money back. Okay, so I took a loss, I got half of it back, and then I turned around and I rolled it forward and picked up another $250. So I got like $1,800 this morning on a loss. So the loss, yeah, I lost money. Okay, I bought it, sold it, made some money back. I'm not break even yet. Okay, so Altria, well, I am. I'm up $400 on Altria, so $500 so far. But Altria, I'm up $500 since I bought it. Okay, profit and loss today $1,400. All right. So anyway, yeah, I got 53,000 into that one. Okay. Ford. Oh, I got to do something about that one. Anyway, let's get out of there. All right. That being said, let's keep on keeping on. So anyway, I did. I took my first loss this year. Actually, I took two of them. I took Altria, and then in another account, I sold some Riley for less than I owned it for because I got a margin call. I'm sure I'm not the only one who got a margin call. Okay? All right, that was Altria. Let's take a look at Intel, because who wanted to look at Intel? Buy and hold stocks wants to take a look at Intel. INTC. Oh, we already looked at this one. Yeah. So I do like Intel. 1950, the 1950s go for 90 cents. Okay, that's over 4%. If you like Intel. This is always comes down to the same basic questions. Okay, does it make sense? Do I like this company? Do I think this company is going to give me a nice cash flow every single week? Well, it either is or it isn't. All right, so let's keep on keeping on. All right, that being said, what other questions do we have? All right, so Aaron, my stock went up higher than the strike. Roll tomorrow or wait until Friday? Okay, Aaron, I'm pretty sure I answered this question earlier. Okay, take a look at what did you buy it for? What option did you sell? How far in the money are you? Are you susceptible of being called away and losing? How do you figure that out? Well, you know what you bought it for. Okay. You take a look at the stock strike price, and then you add the premium you collected. That would be the amount of money you're coming in. Is that more or less than what you paid for it? If so, you might have to roll it into next week or the week after. Okay? So you don't have to pay any money and you don't have to lose anything. So as you keep rolling it forward, you continuously bring in money. Nupster. Uh-oh, I missed that question. Okay, we did that one. Kimmy Marie, thank you. Aaron Hepp, cool bean. Ricardo, que pasa, amigo? Napster, dude, I lost a ton on Kohl's and WBA. Well, I don't know why you lost money on WBA. Everybody that's in my morning trading group didn't lose any money on WBA. Kohl's, I didn't lose any money on Kohl's either. I still own my Kohl's. So I'm not quite sure when you say you lost a ton on Kohl's and Walgreens. The only time you ever lose. Now let me see if I'm saying this correctly, because sometimes people misunderstand what they hear. Okay? If you bought a stock, Kohl's or Walgreens, at a certain price, and you sold it for less than what you paid for it, yeah, you lost money. But why would you do that? Okay, my rule number 1 is never buy something you don't want to hold on to. Well, apparently you bought it because you wanted to hold on to it. Rule number 2, never sell at a loss. Why would you sell at a loss? It defeats the purpose of the game. The game is consistency of profitability. So if the stock drops, let's take a look at Kohl's for a second, because I actually have some Kohl's. Okay? Now, I'm into Kohl's 1162. That's my price on Kohl's, 1162, which is not that bad. 1162, right about there. 11. Right about there. 1162. That's where I'm at. Right now, it's down 6. It dropped all the way to 6, almost a 50% drop. Okay, I'm not bitching and moaning because I know stocks can drop 50% or more from your purchase price. If you're not okay with that, you shouldn't be playing this game. That's number 1. Number 2, rule number 2 is never sell at a loss. Why did you sell? Beyond me. Okay, so fine. I'm in at 11. Okay? That's my price, 11.50, whatever. Okay? But this week, I sold the 8.5 call option. 11. All right about there. Okay, so that's where I bought, right about there. Okay, stock dropped, went sideways, dropped again. Okay, down to $6. That is almost a 50% drop. So this week, even though I own it at 11.50 way up here, I sold the rights at 8.50, which is right here. Okay, the 8.50 calls sold for $9.05. Is that right? Yeah, $9.05 a share. That's not right. Is that right? Hold that thought. Price 20 cents. Yeah. Okay. So the 8s this morning went for 21. The 8.50s went for 20. Now, both of those are over 2%. So, dude, I have no idea why you think you lost and why you're telling me. Okay, I feel bad that you lost. And no, Napster, I remember the name. You have been here before. Okay? But you never was on my morning trading group. You've never actually traded with me live. Because if you did, you wouldn't have lost money on Walgreens and you wouldn't have lost money on Kohl's. Because I still have Kohl's. There somewhere. Right there. Okay, I originally got in at 14, dollar cost average down at 9, so now my average cost is 11.62. So this week I sold the 8.50s, 20 cents, and I sold the 8s, 21. Both of those well over 2.5% for just this week, and my stock is down 50%, but I'm bringing in 2% rather than 1. That's pretty damn cool. At least I think so. So Napster, I'm sorry that you lost money, dude. I don't know why. Rule 1, never buy something you don't understand, you don't want to hold on to. Rule 2, never sell at a loss. Now, I'd feel bad for you if you actually listen to the rules and follow the rules. Hashal, namaste. Thank you, I think. I don't know. Are you always changing stocks? Jay, yes. Okay, Jay, I'm always changing stocks. Because look at it this way. If you ever go to a beach to go surfing, you want to ride a wave until it's done. Then you just go get another wave and you ride that until it's done. It's almost the same thing. All right, so seriously, Nubster, you want to drop me a number? We can chat. Maybe I can walk you through the next one so that you don't lose money. Remember, you're buying a cash-producing asset. If you like Kohl's, if you like Walgreens. Now, we got out of Walgreens after they signed that contract for the buyout and taking it private. Okay, that's not something I want to mess around with. Now, Kohl's, I have no problem holding on to it. I took a deep dive and took a look at the numbers. The revenue per share, the cash flow per share, the book value, a lot of other interesting information about Kohl's that's not readily available. All right, so let's keep on going. UE, is it worth it to continue holding NASDAQ even through the drop? Okay, Yuri, all right, UE. My opinion is, if you're going to buy something, buy it and hold it. Get that cash flow coming in. If it goes up above your strike price, okay, above your profit, then let it go. And then jump onto another one. Okay, you think of it this way. I don't know what kind of analogies you like. I don't know what kind of metaphors will reach you, because we're all different. So let's look at it in a horse racing type scenario. Let's say your money is the jockey. Well, this week the horse I'm on is Kohl's. So next week the jockey might be on a different horse called CVS. And then the week after that it might be on another horse called General Motors. But it's always striving to move forward. That's that 1% every week that I'm looking for. I like safety, I like predictability, I like simplicity. 10 minutes or less, that's what I want. Jordan, what's going to happen on Wednesday with all the tariffs? Another crash? Okay, Jordan, I don't know. Okay. Now, Jordan, it doesn't really matter what headline news there is. You're going to have people for it. You're going to have people against it. The people that are for it are going to explain it in this manner, how wonderful it is. The people that are against it are going to explain and tell you why horrible it is. Who's right, who's wrong? Does it really matter? Because 4 years ago, it was a different scenario. Okay, was it this or was it that? Hi, Rizzo, what's happening? So, is it going to affect it? Don't know. But here's the thing. If you pick stocks that you like, that you will hold on to for the rest of your days, why are you worried about it? Because remember, most of the stocks have been around, well, at least the stocks that I invest in, have been around for 5, 10, not 5 years, sorry, 20, 30, 40, 50, 100 years. So if a company has been around for more than 2 decades, they've seen a lot of crap in the last 20 years. Okay, the older the company is, the more stable it is. So if you buy, let's say Ford, Macy's, General Motors, IBM, AT&T, General Electric, any one of those, well, they've been around for decades. They're really not going anywhere. And they've seen a lot of crap over the last 20, 30, 50 years. All right, so let's keep on keeping on. What are some examples? Ooh. Crackle 2. Grant, how you doing? Card Finder. Trisha Takogo. Good evening. Jordan. All right, so hopefully that answered that question, Jordan. All right, so we honestly don't know what's going to happen. But if you picked a good quality company, you should have an issue with what's coming up. All right, so let's keep on keeping on. What is next? We're going to come up with an example in a little bit. Joe Murray, how much do you make yearly? More than 1% a week. How's that? Mr. Premium of the option. How about Verizon, AT&T, Altria, and Macy's? Wow. You don't want to one. You don't want to answer for one. You want 4.
Okay, Santron San. Good evening, Dollar T. Is that DTR? DTR, Dollar Tree. Is that right? DTR. No. DR. No, wouldn't be DRT. DLR. No. No. Damn it. I don't know it. DLTR. Damn it. DLTR. Dollar Tree. Holy cow. Dollar Tree's up today. Imagine that. All right, so here we go. Dollar Tree. Here's the high. Here's the low. Looks like there or there. One or the other. That's where it was. This is where it is. Look at the motion. Down, sideways. Been in a sideways market or channeling market since August. Just going sideways. Well, let's take a look at the numbers. Is it a good opportunity? Well, let's find out. 72.84. The 73 is going for 260. 74 is going for 219. 75 is going for 160. Well, all three of them are over 2%. Well, I like 2%. I don't know about you guys, but 2% sounds good to me. All right, so let's jump in and take a look. A year ago was the high of the year, and that was 131. Hold on a second. Hold on. A year ago, we're at 131. All right? Where's the bottom? The bottom's right down here. 60. 131 to 60. That's a 50% drop. It's a nice place to be, right here. A 50% drop from the top. Hey, 50% drop from the top. Cool beans. So this is where we are. The high of the year, 131 bucks. Right now, we're at 60. That's a 50% or more decrease. Right, let's look at the last 90 days. Okay, here's the last 90 days. The high, the low, where was it? Where is it? Look at the motion. Sideways, down, up, down. And today, gapped up. Dollar Tree gapped up today and getting right back to where she was. Okay, well, let's look at the last 30 days. Okay, here's the last 30 days. 30 days ago, we're at 68. Drop down to 62, shoots up to 79. So from the 62 bottom to the 79, that's 17 bucks. Well, $17 on a $62 stock, because what was down here, that's the low. That's 62. $17 increase on a $62 stock is over 20%. That's a 20% jump. Well, of course this thing's going to have profit taken. Well, it wasn't really profit taken. It was, people panicking, dropping. But here we are, back down at 62 again, and we'll go from 62 to 72. That's a $10 increase from Friday's bottom till today, to today's close. Well, that's a nice move also. So Dollar Tree, not that bad. Could be an opportunity, even though Friday wasn't the 30-day bottom. It was close. Okay, but she's jumping right back up to where she was. So Dollar Tree might not be that bad of an idea. Now, what does it normally do? Well, let's check out the seasonality. Now, for those you who don't know what seasonality is, it's just a rough idea of what the stock normally does based on historical performance. Okay, January 1st to the left, December 31st, so it's the whole year. Blue line is this year. The blue dot right there, that's today. This is the average. Well, what does the average usually do this time of the year? Well, right there, going sideways like that. Okay, the blue dot is today. Okay, the blue dot is today. That's right here. Well, look at the average. From today, this thing has a tendency to go up. Well, that's based on the last 10 years. That's the average move, the red line. The blue line is the actual move. Now, that doesn't guarantee anything. It just says, well, this is what it normally does. It normally goes this way. Well, alrighty then. Let's do a sample trade
on Dollar Tree. And we'll look at the 73s. Okay, now not that I'm telling anybody to do this, I'm just going to do an example. A covered stock, I want to do the 73s right there. Just one contract at the market. Can send. Here's what it sounds like. Buy one covered call of Dollar Tree. 100s, that's the weeklies. 11 April 25, that's this coming up Friday. $73 call option against the Dollar Tree stock at the market to open. Well, here's the profit, $2.95. Well, here's what it's going to cost, $7,000. Well, let's take a look. All right, get rid of that. First thing I want to do is I want to take the maximum profit right there, $295.50, $295.50 divided by what is it going to cost me to do this trade? Well, the cost of the trade, including commissions and fees, $7,005. That's total of 4.2%. 4.2 for 1 week. Actually, for 4 days. Okay? Because this option, 11 April, it expires this coming Friday. Well, I don't know. Could the option be high because they're trying to sucker you in to buy the stock to give you a 4% trade? 4% return for 1 week? I don't know. You need to ask yourself that question. Do I like this stock? No matter what happens, am I willing to hold on to it? Well, it already dropped 50% from the high of the year. Could it go lower? Yeah, it could. Is it going to? We don't know. Daniel Berry, how are you? Happy Monday. Happy Monday to you too. Okay. So let's get rid of that. Let's get rid of that. Let's get rid of that. Let's change this back to this. Let's go back to there. All right. So that being said, what do we have next? Dollar Tree, best stocks for long term. Crackle, don't know. Anto, good evening, good evening. Canada doesn't negotiate with fascist pigs. So I believe way more low. Okay, Anto, interesting. Now, from what I understand, I'm assuming you're talking about Donald Trump. Well, number one, he's not a fascist, and number two, he's not a pig. He's a human. Okay? And your opinion of fascism? Hey, wonderful. Cool beans. Please, let's not do politics here. Thank you. Elizabeth, how are you today? Okay, Sandra Sand, for terms. I'm not quite sure what you mean for terms. World you want to live in, girl. Hey, James. I almost hate to ask. Macy's, Kohl's, Foot Locker, Mara, and Riot. Those are all stocks that I own. Why are you specifically asking about my stocks? All right. Okay, world you want to look in, girl. Okay, we already did Kohl's. I believe, no, we didn't. All right, let's go take a look at Macy's first of all. Now, Macy's is a 100-year-old company. They've been in business for a long time. If you don't know who Macy's is, you must have been living in a rock, under a rock. Okay, anyway, here's the high of the year. Here's the low of the year. Here's where it was. Here's where it is. Look, at your high of the year is at 21. Your bottom of the year is in the $10 area. That's a 50% drop. If you're curious or if you're wondering, is my stock going to drop 50%? Well, if it already dropped 50%, do you think it's going to go lower? I don't know. Well, let's take a look at where it is. Okay, the high of the year, 2067. Last 90 days. Okay, look at the high right here. 1, 2, 3. Right there in the $16 area. That looks like your resistance. Like it doesn't want to go higher than that. Okay, fine. But she's been going sideways for a while. Now she dipped a little bit. What happened Thursday, Friday, and today? Well, let's take a closer look. Okay, here's your last 30 days. 30 days ago was the high, 1450. Now we're at 1085. Today made a new 30-day bottom. Is it the bottom of the year? We won't know until we have something to compare it to, and that will be tomorrow. Okay? Is it going to go higher tomorrow? Are we going to make another new low? Don't know. I'm excited to find out because I do own some Macy's. Okay? And yes, I know intending a loss on my Macy's. So I will hold on to it. I will roll it into next week. Right now it's at 10. More than likely I'll probably end up selling the 1250s. Because I believe I'm into it like 15 or 16. But I'll sell the 1250s because the 1250s are giving me about 0.5%. 0.5% every week comes to 26% for the year. But Macy's, if you check my trades for 2024, you'll see that Macy's was the stock I bought the most of. I bought it, sold it, bought it, sold it, bought it, sold it, bought it, sold it. Almost every single week. I must have done it 40 times last year. Now, there's only 52 weeks in a year. But if I bought Macy's 40 times, well, I made a nice profit off of Macy's last year. Kohl's, we already did. Foot Locker. Let's take a look at Foot Locker. Same thing with Foot Locker. Look at the high. $34. Look at where it is now. $12. That is a 60%, almost a 60% drop. That's a lot. But I have no intention in getting rid of my Foot Locker because it consistently gives me money every single week. Now, I have a difficult time every once in a while trying to figure out why people don't understand that. If you're bringing in 1 or 2% every single week from a certain company, why would you get rid of it? Okay, so let's take a look at Foot Locker. A year ago, we're at 24.28. The high of the year, 33.21, and that was the end of August. Well, from there, she just kept on dropping. Well, look at the last 90 days. Okay, the last 90 days is the last 3 months. Right? Here's the high, 90 days ago. Slowly dropping, 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 dropping. Well, yesterday, Friday, was the 30-day bottom. The bottom of the year for Foot Locker. Could this be the bottom of the year? Now, today was higher. Okay? Here's yesterday, Friday. Today, higher. So, is it on the bounce to go up? Don't know. We need more data. The only thing about more data, it takes 24 hours to get it. Okay? You can't get it any faster. So, tomorrow night, we'll find out. Is it 2 days to the upside for Foot Locker? Is Friday the bottom of the year? Now, you can only have one bottom of the year and one top of the year. That's it. Okay, when is that going to show up? Well, this could be it. Yeah, so Foot Locker is on my list. Okay, so I'm just going to keep my eye on it. Osama, well, interesting name. Fitzair, what's happening? Mr. Premium, how about Verizon? VZ. Okay, Verizon had a nice update after a big drop down. Look at the movement last couple of weeks. And Thursday was higher. Friday's down. Today opened up way down, but starting to come back up again. Okay, that's Verizon. I like 2 days to the upside. So earliest I can look at that thing is probably Thursday, because we need Tuesday and Wednesday both being up to make Thursday an opportunity to jump in. Now AT&T, same thing. Okay, AT&T up, down, up, down. Okay, what happened today? Big gap down and a big jump up. Okay, could that be a 30-day bottom? It could be. Could. Don't know. Definitely not the bottom of the year, not for AT&T. Mara's next. Mara on the wall. Okay, here's our high, Our low yesterday, here's where it was, here's where, look at the movement. Up, down, what's going on here? Looking for a new bottom. All right, now I do have some error. I did say that. I got a nice premium on my mirror this morning. So look, Friday was the bottom. Today was one up day. We're going to find out tomorrow, is that 2 up days? Wednesday, that would be 3 up days, which means Wednesday would be the earliest I'd jump in if tomorrow was an up day. Now, we're all different. Okay, whoever you are, you have to ask yourself, where is my entry? Where do I call a bottom? Do I want 1 day to the upside, 2 days to the upside, 3 days to the upside, a week to the upside, a trend going up? Well, stocks go up, then they go down, and then they go up, and then they go down. Well, right now, it's in a down point. You make most of your money buying low, selling high. So, is it going to the upside? Don't know. Elizabeth, good evening. Sandra Sand, you got to tell me what 4 terms mean. I don't quite know what that is. All right, that's Mara Riot. Basically the same thing. Okay, you're going to see certain stocks kind of mimic each other. 30 days ago, she drops, retrace, drops again. Okay, Friday, looks like Friday was the bottom. I don't know, is it? Friday's bottom was 640. Today's bottom was 639. Okay, so today's 1 penny lower. So today is the 30-day bottom, or the bottom for this time period. Okay, but do you like it? Are you willing to hold on to it? So yeah, I have Riot in 3 or 4 different accounts. Yeah, some of it did go down. Okay, right, looked at all those. Amanda, CPRX. Now, Amanda, CPRX does not sound familiar at all. And that's why. It's a monthly. 17 April, 16 May, 21 June. Those are months, my dear. I don't do monthlies because they're just not as profitable. Okay, you're going to get to a certain point where you want things simple and easy. Okay, by looking at only companies that have weekly options, well, I've narrowed it down to about 300. So I only need to look at 300 different companies because that's all that fits the criteria I'm looking for. CPRX doesn't fit. That's a no. Straight dirt bag. I'm going to say no to the Qs because apparently you weren't looking at the number. Side hat track. Oh, Sid hat track. Okay. Jose Santos. Que pasa, amigo? World you want to live in, girl. Way to go. Thank you. Buffy, good evening. Ghost, what's happening? Stefan Valentine, what's happening? Karina 45. How you doing, Karina? Austin. What's up, dude? Melodic Angie, here. Okay. Bleep bloop. All speculation. Could very well be. Okay, Amanda, MSTR, my dear, take a look at the consistency of profitability with MSTR. Take a look at the actual numbers. Should we wait until April 9th to see what happens when the tariffs start for the worst offenders? You know, it's all going to be a personal decision. I trade every single week regardless. Now, I did take my first couple of losses today, 2 of them, to be exact. Okay, one of them actually from a lot is going to turn into a profit. The other one, I don't think is going to be profitable no matter what I do. Okay? Because when you have a margin call and you sell it for 40% less, because it went down 40%, I had to cover the margin call, so I had to sell a stock 40% less than what I paid for it. Now, I didn't take a look at all the premiums I brought in on it, so was it offset? I don't know. Okay? So it was more of a hit to my ego than it was to my wallet. All right? I don't like taking losses. So I got 2 losses this year. That's it. 2. Okay, should we wait? So that's going to be a question only you can answer. Okay, do you think there's going to be more panic selling? Do you think things are going down? Because remember, Everything is a decision that you've got to live with. Remember, you got two choices. Do it yourself, take responsibility for your own money, or give it to someone else. Some people can't handle the stress of dealing with their own money. They can't. So, give it to someone else. Let them do it for you. Go have those sleepful nights. Okay? Me, I couldn't do it. Can't give somebody else control over my money. Bleep bloop. IVVD makes sense. Rumble make sense. IVVD. What the heck is IVVD? IVVD. Okay. I'm saying no to this one. Okay. Only because it's a monthly and it's 50 cents. There's no possible way on God's green earth. Well, there is, but I seriously doubt it. How can this company have 20 years of consistent profitability? Bleep bloop. I'm not quite sure it does. I'm not even going to bother with it because it's monthly. It's a no. Roberto, too early. You will know when all MAGA go into foreclosure. Oh, you're one of those. Okay, fine. You know, they say you don't have enough haters, you're not doing your job right. Worth a flipper. Okay. Good evening. SoFi, 15 calls, January 26. Okay, number one, I don't do SoFi. Not enough profitability. And number two, I don't buy calls. 80% of all options expire worthless. So I don't buy them, I sell them. Okay, Amanda already said no to MSTR. Okay. I do answer each and every individual question. You really only need to ask it once. Okay. Micro strategies. Okay, Amanda Robertson. It says right here, there are no dividends in the select time period. So why are we looking at a stock that doesn't have dividends on a channel, which is dividend investing? It's a dividend investing channel, and MSTR has no dividends. There are some do trade, but there's not one of them. It's not. Ticker DKL. Tech is DKL. Who is that? Cornbread Money. That's an interesting name. Cornbread. All right, DKL. DKL. Delic. I'm going to say no. Now, the reason why I'm saying no is because 17 April, 16 May, 15 August, those are all months. How can you get weekly cash flow from a stock that only has monthlies available? So that's going to be no. Sorry, Cornbread. OXLC. What the heck is OXLC? OXLC. No options. Okay, that's going to be a no. Okay, Perillo. Okay, OXLC. No dividends. No thank you. No options. No thank you. Okay, that's going to be a no. Sorry. Mihat, how are you today? Grayson, what's going on? Amanda wants to take a look at Emerson Electric. EMR. Interesting. Okay. So Amanda, I'm not quite sure what you're seeing, but here we go. Here's the high. Here's the low. Here's where it was. Here's where it is. 135 is the high, and bottom's at 190. Okay, what is that? A $45 drop? Okay, so 135 to 190 is 45 bucks. Okay, that's 25, 30%, something like that. All right, anyway, look at the last 90 days. Okay, here's the last 90 days. The high and the low was as look at this. Up, down, down. Okay, gaps once, gaps twice. Today makes a new low, but also has a new high. All right, well, let's take a look. Okay, 30 days goes your high. Okay, goes sideways for a bit. Nice setup. Monday, Tuesday, Wednesday last week. Yep, Thursday, Friday, same thing. Today, a lower, and we have a higher high and a higher low. Wait a minute. Higher high and a lower low. Okay, anyway. So we do have a new 30-day bottom today, and it's on its way back up again. Could it be the bottom? Don't know. You're gonna hear that particular question a lot for the next few days. Is this the bottom for this company? We don't know. So we're just gonna keep our eye on it, Amanda. Okay, cornbread money. I already looked at DKL. It's a no. Inline DXY. Never heard of it. Never heard of it. DXY. There's no options, so we're gonna say no. All right, OXLC. What the heck is OXLC? Yeah. Alrighty. Manuel Mesa. What's happening, Manuel? Lisbeth Figueroa. How are you, Lisbeth? Jeff Jerzik, how's it going? Simone, how are you today? Hi, my friend. I sent you my number. If you can call me, please. Thank you. Oh, it's about time, Simone. You've been here for months. Literally months and months and months. And every night I say, hey, send your phone number. And this time you actually did. Cool. I will give you a call in the morning. Unless, of course, you send me a DM now to tell me to call you tonight. I got no problem calling tonight. I'm going to be up for a couple more hours. Too much energy, you know. All right. Tim Murray. Oh, Morvay. Oh, sorry, Tim. Jay, good evening. Joseph. Henry Jason. Oh, what was Henry Jason saying? Okay. I'm trying to catch up to these questions. All right, OXY, blah, blah, blah. Jeff Schroeder, Simone, blah, blah, blah. Henry, Lowe's. It's 2 weeks before dividend. All right, Henry, let's take a look at Lowe's. You are right. It is 2 weeks before the dividend. Okay, unfortunately, okay, take a look. The high, the low, where was it? Where is it? Down, up, down, up, down, up, down. Well, we're looking for a new bottom with Lowe's like a lot of other companies. So a lot of people, okay, myself not included, see, all my money's invested. Most of my stocks are down, but I keep rolling them forward so I have that consistent cash flow coming in. So I don't like taking losses. But I took 2 today. I did. I've actually got to do a video on that one because, yes, I took 2 losses. All right, anyway, here we go. A year ago, Lowe's is at 240. In July, she drops down to 211. Jumps all the way up. So it was at 287. Almost hits 290. All right. The last 90 days. Miranda, good evening to you, young lady. How you doing? All right, so Lowe's, here's the last 90 days. Here's the high. Here's the low. Here's where it was. Look at the movement. Up, down, up, down, up, down. What are we looking for? We're looking for the new bottom for Lowe's. Now, could it go lower? Yes, it can. We need something to compare it to. At this moment in time, we have the gap down on Thursday, lower on Friday, lower today. So as we continue to fish for that bottom on Lowe's, it's just watch it. Never grab a falling knife. Okay, if it's falling, let it fall. Let it hit the floor. Where's the floor? We don't know. So tomorrow, we will see. Is it going lower tomorrow or is it going higher tomorrow? And unfortunately, that's the game that I play. Because I'm retired now, I really don't care if it. I don't look at daily numbers. I don't. Because it's not going to change my life any. I'm looking for that 1% every week. Okay, so I get the 1% every week. I'm comfortable. That's what I'm looking for. All right. Lowe's. I like it. It's a dividend king. Means they're consistently profitable. Great company. However, I'd be waiting for the bottom before I jumped in.
Garrett, CVX, which is Chevron, very cheap. If it falls in a little more, I might go in. All right, well, let's take a look. CVX. CVX, Chevron, CVX. Well, let's try it one more time. CVX. And there we have it. Holy cow. That's a big drop. Well, let's take a look. High, below, where was it? Where is it? Look at the movement. Okay? Up, down, up, down, up, down, up, down. Look at it, from 170 to 140. That's 30 bucks. That's 12, 15%, something like that. Anyway, so let's zoom in a little closer. Last 90 days. High, low, where was it? Look at the movement. Now, the last 90 days, which is the last 3 months, gives me an idea to find a pattern. Well, look at the pattern. Up, down, up, down, up, down, up, down. Where's it going next? As soon as it finds a bottom, more than likely it's going to go up. Now, here's an opportunity for some of you. Okay, a covered call might be great, but look at where it usually is. Right here, between 150 and 160. Well, right now, you're at 140. Great opportunity. Now, Chevron, they've been around for close to 100 years. They're not going anywhere. Okay, do you really think the oil is just going to disappear? No. Thoughts on EMR? We already did EMR, Amanda. Okay, David G, thank you for that. Amanda, thank you. Stock Learner, thank you kindly there, sir. In your Kohl's example, if you strike the 8 or 850, would that be selling at a loss? Okay, so user 7615794224524. Okay. No, it's not. Because here's the thing. The stock is currently, where the heck is Kohl's? Got to pull up 8 so you can see the 850s. Okay, so at this moment in time, okay, the stock's at $6.81. I sold some 8s and I sold some 850s. Okay, the 8s are right here. The 850s are right here. Now, you got a bunch of different questions rattling through your head. Question number 1 is, could I lose money if it went up? Well, kinda yes, kinda no. Here's the thing. How long have I had Kohl's? How many premiums have I brought in from Kohl's? How many dividends have I collected on Kohl's since I bought it? Yeah, I'm into it at 12 bucks, but I'm selling the 8s and I'm selling the 850. So as the stock goes up, all right, every morning I take a look. So this morning, 681. Am I nervous? No, not at all. Tomorrow, she may be up to 750. If she's over 750, I might get a little concerned, but nothing major. Okay? Now, as she gets closer and closer to 8, maybe Wednesday or Thursday, then I'll start paying a little bit more attention. And I might even put in an alert, okay, a price alert. So when the stock hits a certain price, send me a message saying, hey, Kohl's just hit 758. Well, then I want to take a look. Is there something I should do? So the beauty about that is I can take the 8 and the 850 that I sold. I can buy it back, push it forward another week, and collect some more money. Just because I sold this week's 8 and this week's 850 doesn't mean I can't buy it back and push it forward and collect more money. Now, rolling forward is what it's called. It's a simple process. Okay, you just right click on Kohl's,
create a rolling order right there. Get rid of that. Basically, what I would be doing, I would be buying back 11 April, which is this Friday. Okay, the $8 strike price. Then I would be turning around and selling the 17 April $8 strike price. Only thing it does is it pushes the expiration date one day forward. And by pushing the expiration date one day forward, it allows me. Oh, there it is. Okay, so that makes sense. Okay, just because I sold them doesn't mean I don't have any options or opportunities. Buying back, push them forward, collect some more premiums. It's a wonderful thing. In this example here, I can push it forward 1 week and collect an additional 7 cents. Well, I'm not going to do that for less than 1%. Okay, so I'm just going to say, no, I'll wait. Let it expire, go from there. All right, right there. All right, so hopefully that gives. Okay, Kevin, but he's selling coals every week. So, and the dividend of 22, I'm sure he's in the positive. Yeah, Kevin, you're right. But I have no intention on letting it go at 8 or 8.50. Okay, as an option seller, you have a lot of opportunities to prevent from this, and that's what I'm here for. I'm here to help you guys not lose. And it's a simple strategy. Okay, Amanda, we already looked at EMR, Emerson Electric, so I don't know what you want it again for. Scott. Do you use Scan on Think or Swim to filter Dividend Kings list for an entry? Nope. Good question, but nope. Okay, Amy. Oh, Amy, good evening. Yeah, I liked his method. It is clever. You need to watch to go for good contracts. Thank you, Amy. For example, 11,850 plus he's collecting premium of 20 a week, or so 20.52 is 10.40. So this is a nice way to have steady income. Well, Ms. Amy, I appreciate that immensely. Thank you. All right, keep on going. I'm not sure, but seems it works. I personally like stocks which won't decline over time, even if paid monthly and no dividend. Okay, cool beans. Kevin, thank you. Yep, all right. Left guard. The news of the stocks every sway you in picking or avoiding it. Okay, left guard, I'm not quite sure. The news of a stock ever sway you from picking or avoiding? No, I don't pay attention to the headlines. Okay? Okay, I think news should be free and unbiased. He didn't get 2% times 52. It's 2% for the week. Thank you, user 761579, blah, 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 blah. Uh-oh. Nezra Koitel. Okay. David, good evening. Alcon, you just need a time machine. Okay, Alcon, I'll work on that one. Paul, do you use open interest or implied volatility data for choosing your stock premium? Nope. Alcon wants to take a look at TPL. What the heck is TPL? Does anybody know what TPL is? TPL. Oh, it's a no. See that? That's a no. Okay. Monthly options? That's a no. No. Ooh, Heidi wants to take a look at one. All right, which stocks did you lose on? Altria, M-O, and Riley, R-I-L-Y. Now, I still own a whole bunch of Riley, but I had a margin call, and it was the only one that was unencumbered. So I had to sell some for less than I paid for it. Went against all my rules. It was either that, cough up some cash. I don't feel like doing that either. Either way, I had to cough up some cash. So I took the loss on Riley. It was quicker. Do I need a broker to do this, Joe? Yes, you do. Margarita Gallo, what's happening? Heidi wants to take a look at Wynn. W-Y-N-N. W-Y-N-N. Now, I took a loss on Wynn Resorts last year. I did. All right, so here we are. The high, the low. Where was it? Where is it? Look at the motion. You can see a repeatable pattern. Down, up, down, up, up, down. Looking for the bottom. Well, basically, that's all we're going to be doing for the next couple of days. Looking for the bottom until the smoke clears, till the dust settles. Whatever metaphor you want to use. Whatever's going on in the news is causing the stocks to up, making people panic. Yeah, as soon as that's done and over with, business as usual, we'll be back to normal eventually. Okay. Yeah, so Heidi, anyway, look at your chart, okay? Up, down, up, down, up, down, up, down. That's all it does. Okay, this time she was going up, now she pulled back. The way we're doing now, we have a higher high and a higher low. Even though we closed lower than Friday, we have a higher high and a higher low today. So it is on the upswing, but slowly. So let's keep on keeping on. Lazar, good evening. Hey, New Jersey's in the house. New Jersey 78. Real estate cozy. Dow, huh? Take a look at the Dow. D-O-W. Gonna be looking at the exact same thing. We're looking at everything else. But look at this. The high of the year, $60. Low of the year, below 27. That is a 50% drop. People saying, aren't we in a recession? Well, where do you think it's going to go next? It's already lost 50%. Do you think it could go lower? Yes, it can. Is it going to? Well, that's up to you and me. We get to decide what's too low and what's too high. Because if it keeps going down, if people keep panicking and it keeps going down, and we're just on the side thinking, Dow 27, maybe Dow 20, maybe. We all have that button. We all have that threshold where you see a stock that you know, Dow, okay, 50% drop. Yeah, I'm jumping in. Could this be the bottom of the year? Yeah, it could be. Again, now we've said this. This is like the 8th, 9th time I said this tonight. This could be the bottom of the year for many companies. Many. You can only have one bottom of the year. You can only have one bottom of the decade. This could be it. And that's about the 8th or 9th stock tonight that we've seen that has a bottom of the year. Could be. Third, you misunderstand my question. Does a stock's news, not the news, ever sway your... Oh, of course. Of course, yeah. Thank you for that. Start fresh. I'm selling puts on stocks I don't mind owning at a discount. Start fresh. That is an awesome idea. Maybe a bit risky, but volatility is high. Okay, but start fresh. Yeah, I get that. High volatility, high premium. I get all that. But always remember, somewhere in the back of your head, never do that with a company you don't want to own long term. Because if it goes down, and you are required to buy it, well, you got to buy it at that price, and you better be happy with it at that price. Always comes back to the rule number 1 and rule number 2. Never buy something you don't understand, and never sell at a loss. Left is on the right, please. Yes, Bison, I get that. Your camera is twisted. Yep, I don't have mirror view on YouTube. Sorry. New Jersey 78. I own Macy's at $14.28. What strike price should I sell for it to expire the 11th? Okay, now Jersey, I can't tell you what to do, but I can show you a few things, and I'll give you the as if it was mine and what I would do. I actually, and I did sell Macy's today. Okay. So 1428, so you haven't had it that long, my assumption. Okay. So right now it's at 1085. What does Macy's usually do this time of year? Well, to find that out, we are going to look at the seasonality for Macy's. Well, it would appear okay, New Jersey, it would appear she's going to bump up a little bit before she pulls back down again. Now, that's based on historical performance. It's not guaranteed, but it's a positive signal that, yeah, it's not going down at this time of year. So that part's good. So let's take a look and get an idea of what might be good. Okay. So currently you're in the 14 area, which is way the hell up. Stock's currently here. Now, in my humble opinion, okay, I like 3 to 4 strikes out of the money. So right now, at the money is 10. So 3 strikes, you're looking at the 12 or the 1250s. 12s or the 1250. Okay, here's here. Now the 12 is paying about 1%. The 1250, it's paying about 0.5%. So you got your 12 here, 1250. Okay, 1%, 0.5%. That's the difference. So 1%, yeah, that's 52% a year. But 0.5%, that's still 26% a year. And it's only for a week or two. So what happens once she starts moving up? Well, once she starts moving up, you move your strike price higher and higher as the stock moves higher. It's actually that simple. It's not that difficult. All right, we got a couple more questions. Agreed. Thank you, Starfresh. You're welcome there in Jersey. All righty. We are done. That's all the questions, and it's 11:27. You guys have nothing else for me to look at? Cool beans. Damn it. That drink's all gone. All right, so that being said, my name's James. This is Dividend Stock Talk. We're going to do the exact same thing again tomorrow. Frito wants to take a look at Micron. Okay, let's take a quick look at Micron before we're done. We're probably going to see the exact same thing. Yep, we are. Most now. Going sideways between 90 and 110 for the past 5 or 6 months. And then we had last Friday, Monday, and Tuesday. Look at that setup, nice. And then Thursday and Friday's drop. Today's a little bit higher. Okay, looking at that same thing. 90 days. Okay, up, down, up, down, up, down. And right here, it looks like she was going to go back up until this hit. Yeah. All right. So, buenas noches, amigo. ¿Qué pasa? ¿Cómo está, muchacho? Hasta mañana, señor. All right, so you guys have a great day, and we will see you again tomorrow. Tomorrow. We'll see ya tomorrow. Got your Gator Blue on. Thanks. You got it. Over here on Instagram, you guys have a nice day. You guys have a nice day on Facebook. And you guys on YouTube, you guys have a great night. We'll see you again tomorrow. end is near.
Good evening, ladies and gentlemen. And so I face the final, my friends.
Good evening, ladies and gentlemen. This is James from Dividend Stock Talk. Today is, let me quickly check, April 7th. Let me start this one over again. Good evening, ladies and gentlemen. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stock weekly cash flow. Today is the 7th of April, second week, second quarter of 2025. Today I actually took my first loss of the year. So we are second week of the second quarter, and I took my first loss of the year. I didn't take any losses at all since the beginning of the year, and today, Altria and Riley, only 2 losses for the whole year. But Altria is not actually a loss because I bought it back, sold some options against it, and I recovered almost all that money I lost. So that was kind of cool. And I'll probably get that money back, but I'll explain it in another video. But for Riley was down like 40%, and I had a margin call. That happens. You dance to the music, you got to pay the fiddler eventually. You guys have a great day. I'm on every single night. Sunday night, Monday night, Tuesday night, Wednesday night, Thursday night. I don't do Fridays, don't do Saturdays. 9 p.m. Eastern Standard Time until about 11:30. And I show you how I am getting a simple, safe, predictable, consistent 1% per week, every week. Okay? On average. You guys have a great night, and we'll see you again tomorrow.